Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, keep in mind a couple of things. One is that there's obviously risk involved with each trade that you take, so you should manage risk in a way that makes sense for you. And we'll go through some ideas in that regard with some of the tools that are found within the order window of our web trader and app that really helps calculate things for you and makes your risk management side of things quite a bit simpler. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into the web trader platform, which has the same functionalities and tools built into it as our AvaTrade app. And you can trade on both the MT4 and MT5 accounts from the same location. Now, to log in, we just go to the upper right-hand corner and enter your email address and password, and you'll find yourself in the web trader platform. Now, our focus today is technical analysis, but we should talk a little bit about what has happened from a fundamental perspective most recently anyways. And so yesterday, and then again today, the US had a slew of economic announcements that relate to inflationary data. And so yesterday it was CPI data, consumer pricing index information, month over month, year over year, core inflation data, etc. And it was a little mixed yesterday, but mostly showed inflation is largely under control and dropping in the US. And then the data today was even stronger in that direction. The PPI data, the producer price index, showed across the board all of the numbers, larger drop in inflationary data than expected, which the markets have deemed that sort of news as good news. There's less fear currently about the economy slowing too much with that lower than expected data, and more optimism about the fact that, hey, that means inflation's really gotten a lot better if this data is coming in showing little to no inflation from month to month and year over year. And so in the US markets, then there was positivity both yesterday and then again today, with record highs on the NASDAQ, US 500, etc., repeatedly being hit yesterday and today. And then, not that long ago, I guess there were some remarks made by President Trump out of the US, some information that leaked out maybe about a conversation with some of the various lawmakers in DC, that there was some talk about, will he maybe be firing Jerome Powell? I know he's said multiple times he's not happy with Jerome Powell's decision not to cut rates in the US, but also he's said repeatedly that he wasn't going to necessarily fire him. Now it's with the article and news that just came out really in the last 45 minutes, I saw it, that there was either he just said it or the news leaked out that he said it in the past 45 minutes or so. The markets really spiked down, the equities, the major indices, and the volatility index went flying up, which is interesting because the idea that if he fired Jerome Powell would be that he would likely appoint somebody who would be more likely to cut rates. And that actually, the idea of cutting interest rates has been a positive thing for the markets thus far. Every time there's anticipation that there might be a rate cut, the stock markets have gone up in response to that. So I think it was an initial knee-jerk reaction, this big spike down, and I think it's already spiked back up, which is what I expected when I saw the spike down on the NASDAQ, the S&P 500, etc. So we're in a situation here right now where maybe there's increased expectation moving forward that maybe Jerome Powell will be fired and that perhaps someone will be appointed that's more likely to cut interest rates in the US moving forward. And if that's the case, you might see bullishness on the stock market, at least in terms of the U.S. major indices and stocks, and you could possibly see a weakening of the U.S. dollar. Currencies tend to weaken if rates are expected to be cut, in which case maybe safe havens against the U.S. dollar, gold, platinum, other commodities such as crude oil, perhaps could maybe have an easier time against the US dollar as well. Not to mention other currencies like the Great Britain pound, the euro, etc. if the US dollar has reason to be bearish. Okay, so that's a backdrop. As we go in to look at some technical analysis then, I think probably the S&P 500 is a good place to start. It's a large index with a lot of companies in it, balances things out quite a bit, so one company doesn't really swing it so much. And here we can see the volatility on the 15-minute candles. We see the climbing earlier today. There was a support level, and let me just delete some of these lines. I've got quite a bit from past sessions. Okay, and what we'll see here is we reached a high up here around 6,300. Not that long ago, and we had this big spike that broke this support level here. If we see this as support, and it was moving up today, trying to break this resistance, and then the news came in, and here's the spike down, which I immediately thought that's probably a good spot to buy, because it's a knee-jerk reaction to something that actually the news, like I alluded to earlier, the news actually maybe is kind of positive for the equities. If Jerome Powell might be let go and perhaps someone who's more likely to cut rates would come in. So the knee-jerk reaction was, oh, he might be fired. And then the thoughtful process afterwards is, well, that might mean rate cuts, and boom, the markets come right back up. So it looks like this, at the very least, could be in this ranging pattern again, with this support level maybe being somewhat trustworthy if it pushes down again, to trust this support level to buy off of. And the current movement now, I suspect, will go up and challenge this resistance level that it was at before that article broke, before that news came out. Okay, so you can see the power of the fundamental news, but then you also see how the technical analysis then comes into play to understand where might you then get in or out of a movement once you determine the direction you think it might go. So if you think this has reason to climb back up again towards the day's high, well, we see the resistance level here. So a scalping type move would have been to buy off of this support level once it came back up and found support here again, and then to have a take profit somewhere near this resistance level if you want to get in and out kind of quick. Okay, and so the point here is trying to trade in the direction that you think the fundamental headwinds are blowing, in this case upward maybe, with anticipation, more likelihood of rate cuts maybe coming than otherwise would be if Jerome Powell was not potentially going to be fired. Not that he will be, but it's all about speculation, right? And so if that headline hits, you see the reaction, immediate volatility, and then rebounding in the direction that, well, what does that mean for the markets or the news? And so you could take this a couple different ways. If you feel that that news would make the markets go up, and we already know there's other news that came in, like I alluded to, the PPI data came in today and was much lower than expected across the board, which means inflation is really under control. And so that stacks on the CPI data coming in, showing low inflation, and that in itself has caused a bullishness type movement. And so that then stacked with maybe Jerome Powell could be going out the door. If you feel that that news means markets should go up, then you do your technical analysis with that directionality, okay? And so if that's what I was doing, if I'm buying now on a market move, I've got my stop loss down below this support level. I don't feel the need to go below this wick because that was a high volatility spike, but below this support level here, below this line, it makes sense to me to have my stop loss if I'm buying on this. and my take profit on a short-term move would be here. Okay, so right now where it's at, it's almost equal risk to potential profit. You could do a pending order as well, just above the support level right here. If it pulls back down, to buy from that location, and then maybe you see fit to have your stop loss below the spike, if you can get a better entry point near the support level. Okay, and you could do both. In case it doesn't pull back down for you, you take a market move with the stop loss just below the support level, take profit up here maybe, and also a pending order down here. In case it does pull all the way back down, you get in at a better price with your stop loss then below the low of the day, below this spike. Okay, so you could do a double move or single. Okay, that would be up to you how you might handle that. What else can we look at with this chart is, well, what's the bigger picture? And I'm showing you a scalp opportunity, right? A little easier to hit your stop loss before it goes the right way when you're trying to scalp, but a little easier to hit the take profit before something could change with the headlines. So, and that's what scalping is about, trying to catch the current momentum and getting out before the news changes, before the momentum changes. It kind of looks like this might try to test this support level again. So for those of you that would be interested to try and buy with this news, if you feel that that's what the news says to do, you might get a shot from closer to the support level, but you also wouldn't necessarily be off with a market move either, if you feel like it should climb up. So we've got that going on here. Very simple if you do the risk management. To have take profit, if it's up here at 6,300 or just below that, up at that resistance, so 62, let's say 95. Okay, there's my potential profit. Stop loss, if I put it down below this support level, I might need to be at this line here to be below the support. So if I say 62.53 for my stop loss, okay, then I see that I'm having to risk a little more than my potential profit. Now, if this pushes down, it gets better and better for me, okay? Now I can adjust my trade size with that entry point and exit points. Now I can adjust my trade size and see the amount of risk that I'm comfortable with. And my balance is 55,000 plus, so around 550 would be like 1% of my balance. So going into the trade, you should know, how much am I comfortable risking? Certain amount per trade, certain amount per day, etc. And so let's assume that I'm comfortable risking, I don't know, 500 per trade or 550, about 1% of the balance here. So it's close to that now. It's moving by the second because the market's moving. Maybe I need to go to 0.2. And that gets me down below 500, okay? 0.22, and it's hard to get an exact number because it's moving, but there I'm down under 1% risk, and I can go ahead and buy on that. Okay, so now I know I'm risking around 1%, actually a little less than 1% of my balance, and maybe you risk 0.5%, maybe you risk 2%, but the point is, you know how much you're risking as you set it up in the order window because it shows you. Okay, you can adjust the trade size till it's at a spot that you're comfortable with. Now, because this was a market move and I didn't do a pending order, when we look for the trade, I can find it here in the open positions. Okay, and everything's on my chart for this trade. And what I mean is, here's my stop loss I put, here's my take profit, there's the lines I drew, the support level that I've got my stop loss below, here's the take profit line and the resistance level up above that I drew, okay? And I can adjust the lines I drew. I can adjust my take profit and stop loss lines just by dragging and moving them, okay? So at any point, you can come and adjust your trade while it's running, okay? I can't adjust my entry point. I wish I could sometimes, but the entry point is set. I can't drag that around. I could re-enter with another trade to get another entry point, maybe another 1% entry at a better price, or maybe it's going the right way and you feel like it's a strong move and you want to enter a second trade, but again, with a measured amount of risk and potential profit. But this is one move that was a market move based on a couple things. We're looking at the chart and seeing that it's starting to try and uptrend again above the support level after this big spike down and the rebound back above the support level. So technically speaking, it's in this range here. Now, if we want to look at another possible move, okay, let's go back to the main chart. Let's put that up again, and let's think about another idea with the same instrument, meaning, and we could vary the instrument. We could look at, the DAX. We could look at the FTSE. We could switch markets, and they're probably moving similar because the global market is so connected. We would probably see that not only is the NASDAQ doing something similar, okay, but the UK 100 also probably did something similar, okay, and here it is. So here's the climbing, the resistance level where it was trying to climb during the day. Then we see the big pullback to the support level, and then we see the rebound back up. So you could diversify and do, I don't know, a 1% risk or 0.5% risk, whatever it is you're comfortable doing with different instruments, but for the same idea, for the same reason, okay? The reason I did the US index was because the news is more directly related to the US. But it doesn't mean you couldn't trade on other instruments with the same news. You certainly could. Now, if we go back to that US 500, I want to show you another perspective that you could look at. So while you're trying to scalp maybe a short-term profit off of the current momentum, hoping that all of that economic news that came in with low PPI data out of the US, easing fears of inflation, and on top of it, maybe Jerome Powell could be out of the picture and more likely rate cuts. So going with that momentum that you think exists for a scalp and taking profit before it would have to break the resistance level up here, that's one way to trade, okay? Another way would be to say, okay, this type of news isn't short-term news, is it? Rate cuts, replacing the guy who makes the decisions about monetary policy in the US, or one of the main guys anyways, that's kind of a long-term thing. It's kind of big news. So it's not just a one-day type of news event. It's something that will affect monetary policy in the US for years to come, potentially. And so you don't necessarily just want to scalp a short-term move. You might also say, well, let me look at one-day candles or one-week candles and see what's the bigger picture here. So what the bigger picture is, as I look at one-week candles and one-day candles, we've got an all-time high right there, okay? And I think one-day candles will give us a better view. So here's our one-day candles. And that is the all-time high, okay? I'm dragging the chart down and over. There's nothing up here. So this is the line I just drew, this line on the one-week candles that was the all-time high. So our resistance level on our current move is this first line, okay? This is the scalp move that we're trying to get a short-term trade to take profit with a scalp move. But the bigger picture is there's not a resistance on the one-day candles until we get up to around 63.50, around the all-time high, okay? And so if we go to 4-hour candles and pull this down, then we see here's that all-time high that was on the one-week candles, and then on the one-day candles we looked. What we're seeing here is the all-time high at about 63.43, okay? Zeroing in on the smaller candles. So the scalp trade is take profit right in this zone at the first resistance level, which was today's high. A longer-term move, which gives you a better potential profit to risk, meaning I can get my stop loss below the support level like the scalp move and have a take profit not here, but up at the all-time high. And without having to break the all-time high, I could take profit around 63.40, okay? And so if I wanted to also do that to diversify my move, so I'm clicking buy and I'm saying all-time high 63.43 or so, so take profit 63.40. 63.45, or I'm sorry, 63.40, just before the all-time high. Okay, and then my stop loss can be down here. And maybe in this case, you say, I'll go below that spike. And if you were going to move this down, let's go to the smaller candles now for the stop loss. 1 hour candles. Okay, and here's the bottom of the spike. So if I'm moving, if I'm putting a stop loss below that spike, I need to get below 62.40 approximately. So that might be a little more distance than you want on your stop loss. It would depend. 62.40. Okay. That puts me in a place. Remember, this is the scalping take profit. The other take profit is up here. So I've got this distance from here up to here on the longer term move for take profit. And my stop loss is here down to just below here. Okay, so if I go 62.35 even to get more fully below that spike, okay, I'm risking about 5,900 to go after 9,800. Okay, so almost not quite 2-to-1 ratio. If this pulls down a little further, it will be, but a better potential profit than risk. Okay, and now I can adjust my trade size to be the amount of risk that I'm comfortable with. So 0.05, I'm risking about 200. 0.12, I'm risking 459 or so. 0.13. Now I'm getting closer to my 1%. So it looks like 0.14 is going to be the sweet spot. So about 520, which is just under 1% of my account. Again, there's nothing magic about 1%. You could be risking a different percentage of your account per trade, but I'm using that as an example. And so I could make near 1,000 and risk just under 1%. So trying to make 2% almost, risking 1% on the account, less than 1% to make near 2%. And hopefully in the direction that the fundamental news might push this. Okay, so this would be a market move. Pending order, you might put a pending order on the support level if you want to try and get a better price before entering. Okay, and that would depend on your preference on something like that. But let's say market move is what you're looking for, and you take a shot that this will move in the direction of the high that it was at just yesterday. Okay, yesterday was hitting these all-time highs. A bit of a pullback. It was climbing again with the low PPI data today. It really reacted positively to that. Fundamental news then pulled this down with the news about potential firing of Jerome Powell, and then right back up above the support. And the idea here is we're hoping that the support level holds and that the news actually is in favor of climbing. Okay, and if it breaks the support level and breaks this low, then our technical analysis would say, well, that's a downtrend again then. And that's why your stop loss is down in this area down here to get out if the downtrend returns to that level of significance and with a very small risk. Okay. So any questions, comments before we leave this idea with the US 500? I'll pause for a moment. And if I see any questions pop up, I'll go ahead and address them as I see them. All right, so what else can we look at? You know, I saw platinum really moving. Platinum's been interesting because, you know, for a long time, the price of gold and platinum, you know, gold was even ahead of platinum, or I'm sorry, platinum was ahead of gold traditionally per ounce price. Or close to it anyways. If gold had passed it up, platinum then would be back on top. But these past couple of years, we've seen such a run with gold going so high, but the case was not the same for platinum. Well, guess what's been happening lately with platinum? As gold is pulled down some, boy, has platinum been making a run. Now in the 1 hour candles, what I see on the 1 hour candles with platinum is an opportunity if you think it'll continue to push up. When I say platinum's been making a run, I mean it's been making a run upward quite a bit. So this was the high we reached last week. This was the open this week. So this is a bit of a double resistance at the top. We see a technical breakout today from the resistance. Okay, here's a resistance level. Resistance here and down. Resistance here until it broke through. It became support in this area. And then once it broke through, it became resistance again on this price. Resistance, resistance. And just today, we spiked through and then pulled back. But it looks like it's trying to come right back up through that breakthrough. Okay, so this looks like technically a breakout move that was signaled and maybe a retracing of that breakout move. Okay, now that's the technicals. The fundamentals behind why might platinum rise? Weakening US dollar, potentially. If there's higher anticipation of rate cuts now in the US with such low inflationary data and the news about Powell, that's a double whammy for the strength of the US dollar potentially in a bearish sense. And so platinum and gold as safe havens against a weakening US dollar can make sense. Okay, so there is a fundamental reason why you might think platinum could push up again as well. So let's say you want to go with that move. So we're looking at buy on platinum, take profit at this resistance level might make sense for a scalp. So 1464. Again, using the technical resistance level from the open of the week and the close of last week, kind of a double cap here on this resistance to determine where you might take profit. Okay, maybe $1 before that, so it doesn't get close and pull back down before you take profit potentially. And then stop loss. Well, if it breaks back down below a support level that it's above, then it would establish a downtrend again. So if I go to 5-minute candles, I can look and say, okay, if this comes back below here, okay, on the 5-minute candles, this was resistance, resistance, resistance. And then earlier today, it broke through and it became support. So this is an old resistance level that became support as the inflationary data came in showing low inflation. That's what drove this up potentially. Then the news about Powell brings it down and gives you an opportunistic entry point if you think this will continue to climb. So this is a support level at this point. Old resistance equals new support. And so if it goes below that, you might get out. So if it hits 1425 or lower, you might be thinking, okay, that's a good spot maybe to get out. That's almost 3-to-1 ratio here. So I could even put this down to 1420, something like that, to try and make my stop loss a little more patient. And that's still better than, or about 2-to-1 ratio now, okay? So once I've got that set up with how much I want to risk and versus reward ratio wise, and I've got my stop loss now where I want it down at 1420, let's say, right here. You would really have to reverse this uptrend to hit that. Now I can just adjust my trade size to be the amount of risk I'm comfortable with. So there I'm risking 770. There I'm risking 608. There I'm risking 453, so I could even do 0.35, and there's about 1%, less than 1% of my balance. So then I make my move, okay? On the 5-minute candles, it's showing uptrend. If we go back to that other view, 1-hour candles, okay, we see it already broke this resistance level. Earlier, the pullback was the Powell news, and then it just looks like it's trying to retrace that movement up because the more permanent news is inflation is down quite a bit and the US dollar might have reason to weaken. And so gold, platinum might be something people who are trying to get out of a weakening US dollar might look to buy into. Okay, so you don't always have to have a fundamental story behind your technical analysis, but sometimes it's fun and maybe makes you more certain of what you want to do if you can explain the pattern on the candles with what happened fundamentally. And so then you understand what's driving the technical patterns, and that makes you a bit more certain about what you might want to do. Okay, rather than going with this downtrend when it was down here, my thought right away was I think it'll go back up because the fundamentals tell me that was a reactionary spike down and the trend actually might reverse the other way, which is what has happened so far. We'll see if that continues, but that's what we've seen so far. So we've got 2 trades running that are in the money. We've got one that we just opened, so it'll take a little while to get through the spread and hopefully move towards profit as well. But you see the first scalp trade you could have already closed in profit. I do see a question popped up. The question is, what happened if you buy only, you don't sell, but you want to avoid losses? Okay, so I'm not sure which instrument you're talking about, but I personally wouldn't have a rule where I only buy. I let the candles tell me with my technical analysis what's the direction of the trend, where are the support and resistance levels. If you want to throw your favorite indicator on there that helps you out as well, RSI, relative strength index, etc., you can put those on there if that's part of how you make your technical decisions. I tend to read the candles myself rather than an indicator, and that's how I teach in my webinars, is because that's what the indicators are reading. And if you can learn to read the candles, you could probably do a better job than most indicators in making up your mind as to when the right move is, because you're looking back at the candles just like the indicators do, okay? But your question about how can you control risk if you're only buying? Well, we've controlled risk with that stop loss, right? You also can diversify to kind of hedge yourself a bit. You know, if I'm buying on platinum against the US dollar, maybe I'm also have a reason why I think the US dollar might go up against something like the yen. Maybe the yen is a safe haven currency, and maybe there's reason for it to weaken if there's optimism. And so even if the US dollar is losing against platinum, maybe it can go up against the yen, right? And so I've kind of hedged myself, because if the US dollar strengthens and pulls platinum down and I lose that trade, then it's even more likely that the US dollar would go up against the yen. And, you know, so I have the possibility there where I could win both of those trades, but it might be hard to lose both of those trades, okay? Because if the US dollar strengthens, I should win at least maybe one of those. So there's some ideas like that with controlling risk as well, where I might be buying on both of those, buying on USD JPY and buying on platinum USD, and I could win on both, but it might be pretty hard to lose on both because of what's happening fundamentally right now with the US dollar and the optimism about inflation coming down. Okay, I hope I understood your question correctly. I answered it as best I could with what was there. Okay, so I think this is a good place to stop. We could go on and look at other instruments or other markets. That's the word I was looking for. So we could look at the FTSE. We could look at the DAX. We already took a quick peek at one of those other indexes or indices, and what we saw was the pattern seems to be somewhat global right now with the major indices, with the reaction that occurred, with the movement up, followed by that spike down, followed by a recovery back up. So we'll see if that continues. But the main point of the session isn't me to say I think you should be buying on US 500 or something like that, or buying on platinum. It's more the point of line up what the most recent fundamental news is, and then help that to determine the directionality that you prefer to trade as you go in to do your technical analysis. And so if that news was about crude oil, if that news was about you know, something happening in the UK, whatever it might be, then you use that news to help you determine what direction you prefer to trade the pound, or you prefer to trade the yen, or you prefer to trade, in this case, the US 500 or platinum. And then you go in and do your technical analysis to see if the trend is trending in the way that you think it should to trade in that direction. If the support levels and resistance levels line up the way you think they should to trade in that direction, and then you make your move from a technical point as well. Okay. All right, everybody, I think this is a good place to stop. We'll see how those sample trades carry out, but you can have a lot more opportunity. That news isn't going anywhere. We already have the headline there about Trump alluding to maybe firing Powell. And we also have the very low inflationary data out of the US, increasing potentially the likelihood of rate cuts in the US. So that effect on potential bearish pressure on the US dollar is there, and potential optimism in the markets about lower rates seems to be there, not just for the hour, but maybe for the coming days. Okay. All right, everybody, good luck with your trading the rest of today and the rest of the week. I'll be back at it tomorrow with a session focused more directly on fundamental news, economic announcements, a little less on the technicals. But again, like we did today, we'll tie it all together anyways with both the fundamentals and the technicals. We'll just spend a little more time on tomorrow's session, which starts at 11 a.m. UK time. We'll spend a little more time on the fundamentals, on the economic calendar, etc. All right, everybody, thank you for joining, and good luck with your trading. Bye for now. Sorry, I just saw that question. Yeah, crypto is affected by fundamental news, absolutely, but not as directly, with today's news necessarily about interest rates. But in general, yeah, the big news affects cryptocurrencies because they're paired against representatives of fiat currency, like the US dollar, et cetera, the euro. So as those currencies strengthen or weaken, cryptos can move a bit against them as well on the same news. Very good question. All right, everybody. Bye for now.